This is the video for Friday, June the 19th, and what stands out most of all is this volume. We have not seen this kind of volume in a long time, and this was when the Dow opened higher and then just continued to drop and then went sideways. Same with the Nasdaq. Look at that volume. Big pop, lost it all. So it looked like it was off to a great day. Not to happen. The McClellan oscillator came down. Now let's take a look at the McClellan oscillator a little different way. And you can see now that we've got a little bit of a trend line. So you could say that the bulls are in charge because the trend line is moving higher. So the bears are pulling us down, but the bulls are keeping us from going below this trend line. So it's going to be very important where we open up Monday and Tuesday next week if we fall below this trend line. You've been hearing a lot lately about maybe this is a W-shaped recovery and not a V-shaped recovery. So let's see what that would look like. After I hit the stop button, I realized I hadn't shown you volume, so I had to insert this little clip using iMovie. But look at the volume. Look, this is the stacked volume. We hadn't seen that volume since June the 9th. So that's Friday and Monday. We saw similar volume than this. But look, we have to go all the way back to April to see this kind of volume. So that's pretty extraordinary. Mind you, Friday was what they call quadruple witching. It was the expiry of futures, probably the SPY, some bonds. Look up what quadruple witching is. But there was a lot of positions being rolled. So there's you would expect exceptional volume, and we certainly saw it in selling. And then the summation index, the summation index continues to ride us over 4,000, but it's coming down little by little. Look at the S&P, and we're looking at a weekly chart. We're going to start seeing some possible W's in patterns as we go through some of our stocks. Let's look at this trend line. We're looking at a weekly chart. So first of all, on a weekly basis, the S&P closed higher than it opened, but lower than the previous 2 weeks. We got the start of another trend line here that might keep us down a little bit, but look how close we came to this trend line, which has a point really that starts back here in 2007, 2018, then was support in December of 2019, and now we're looking at that now as being resistance. The W pattern would mean that we're going to go down more before we go up again. So W is really two V's side by side, isn't it? Let's look at the volatility index. That'll tell us something else as well. The volatility index, we've said, has always been really, this is our neutral zone. When we're in the neutral box here, the market behaves beautifully and just keeps moving up and up. So there's no fear in the market when we're in this zone. However, when we're staying within this area here, this second level of volatility, what we see is indeed a W pattern where we can see the market going down, up, down, up, down, up, down. So we've got a V in here, we've got a V in here. So we've got two V patterns, and then we finally were able to take off. And we're seeing exactly the same thing now because we're in this box here as well. This is a weekly chart here, but we're in this box as well right now, and we've been in it for quite some time. Let's take a look at the Nasdaq. Nasdaq had a great week, finished higher than the week before, finished on a high note, very close to its high, just stopped short of this 138.2% of a Fibonacci that started in 2008 and peaked in September of 2018, pulled back to 78.6, and now topped out at 138.2%. The Dow Jones, we're looking at a similar set of trend lines that we saw with the S&P. The Dow Jones didn't have as good a week as the rest of the market, but it still did finish up higher than it opened on Monday, but well below the previous 2 weeks close. Apple did very well. Will Apple do a W-shaped? They may very well, but the pullback I don't think is going to be very deep. If we're going to get a pullback in Apple, I wouldn't expect it to be any lower than this value right here. So let's keep a look out on that. This is a weekly chart, and see if we can't see buying happening again in the 325, 327 area. Home Depot, great stock as well. This is its weekly. It also was a victim of 138.2% on a Fibonacci that started back here in 2013 and topped in January of 2018. And now that big wave up, which had a pullback to 78.6, then back to 100, then down to 61.8, then up to 100, and then a little head fake, and off it went to 127.2. Then we had the coronavirus down to 50%, up to 138.2. So if you ever have somebody who says, what is all this Fibonacci stuff? Well, show them the Home Depot chart. Show them the weekly chart going all the way back to 2005, 2008, and it's really beautiful. Caterpillar, it finished higher. Not much to say about Caterpillar. I'm just going to take a look at one more thing. That's banks, and banks are showing us a W pattern starting here now. So you got down, up, down, down, up, down. And the last stock I want to talk about is Boeing. I didn't say I would short it. Zach asked me that he was thinking about shorting Boeing, and I said that Boeing looks like it's a stock that could be shorted because of all the bad news for airlines. And here are your support points. Certainly if it drops below 23.6 on this Fibonacci, go ahead and short it, and then set your set getting out at 23.6. Or if you're willing to take a little bit of a loss, wait until 38.2, but it's likely to get resistance at this 38.2 and go down again. Now it started its pattern, and it's going to see a W as well. So you might want to wait until 38.2 and short it at 38.2 all the way down to 23.6.